Good afternoon, everybody, and welcome back to Schwab Coaching for our next topic, trading breakout patterns. I am your host, Kevin Horner. I want to thank you all for being here and joining me today. We've got a full and complete lesson to get to. I am excited. We have some new example trades to pull up and try out here for the breakout class. We've also got an example portfolio that is holding long positions in a couple of different stocks, and we're going to be managing those trades as well. So we got a lot to get to today to discuss key concepts that traders working on breakouts might be considering, and then subsequently, once we're in those trades, how do we manage them along the way? Do we incorporate stop orders? Do we raise our stop orders, etc.? So lots to get to with you all, but we are pleased that you're here. So thanks for joining today. Say hi to my friend Barb Armstrong in the chat. Barb is a friend and fellow coach. She'll keep an eye on the discussion there in the chat function, as will I. As much as I can, I want to bring your direct questions into our discussion today so you can feel comfortable posting for the duration of the segment. We go about 45 minutes in total. Now, before we get started, I'm going to lead us off with our disclosures, and then I'm going to get to a couple of key details that I want to remind you about, and then we're going to dive right in. So first of all, bear in mind that our conversation here is only for your information and your education. We do not make recommendations or endorse a strategy or approach to the market specifically. Of course, we're not going to endorse any individual equities either. As it relates to options, these carry a higher level of risk and are not appropriate for all investors. You'll want to make sure that you are approved on each account in which you would like to trade options. Additionally, here we work in a paper money version of the thinkorswim desktop application. One key difference in working in paper money with options is that you will not be assigned early on short option trades. That means that you will always carry a short option to expiration. However, in real money accounts, you can absolutely be assigned early on a short option, even if that contract is not in the money. Please keep that in mind. And if you ever have any questions about those specifics, you can always reach out and speak with a representative. We are available for you 24/7 every day of the year at 800-435-9050. And then lastly, I'll just remind you, we talk technical analysis as a part of the process as well. Continue to think of technical analysis as simply a piece of the overall puzzle. We do not encourage you to base decisions exclusively off technicals. In fact, we wouldn't encourage you to base decisions exclusively off one approach to the market, regardless of what it is. We do think it's more of a puzzle-based approach. In terms of our agenda, we're going to hit you with a couple of quick announcements. We're going to place a couple new example trades on some charts that have come across today, and then we're going to get into trade management of the existing example portfolio. So let's start with a look at the agenda, the kickoff announcements. So for those of you who are new here, we run this particular segment. This particular segment is just one of the many that's available to you every single week here on the Schwab YouTube coaching channel. Of course, we would love your follow right here. It would be a big boost for us, but also a great way for you to be reminded of the live content available for you each and every day from 7:30 a.m. Mountain Time all the way till 3 p.m. Mountain Time. We take you through that final hour of market closure. So 9:30 to 5 essentially daily with live content. Click on the subscribe button on this channel. You notice mine is not there because I'm already subscribed. So you can do the same. And then finally on this page, I'm just going to bring you to a slightly different one here, everybody, the schwab.com coaching page. This page is a wonderful spot for you to bookmark because not only can you get our existing live webcast and virtual workshops like this one, get the calendar for those right here. You even can search by your coach. You can search by your particular skill level or even your preferred webcast series. So check this out. And for those of you who are unfamiliar, we are hosting live events around the country now, and these are things like Market Drive, which is that overall market 30,000-foot view where we talk macroeconomics all the way down to the end. And then we also offer our workshops. Workshops are an excellent way for you to further your knowledge about trading and investing in the marketplace here. So great opportunities. The big one coming up in Miami, I will be there with you all on the 23rd. If you are able to attend, love to see you. And if you scroll down a little further, you'll notice that we get into January here and we are starting to create registrations for you all, but you can get an idea of where we'll be next year. All right, so with that, we are going to start off with a look at thinkorswim desktop. Now, normally, I would start us with a review of what's going on in the market. And I'm just going to briefly and cursory say, hey, we got an uptrend working in the S&P 500. We have had a nice breakout since the completion of the election last week. And to this point, that level has been maintained. As you can see, just kind of holding on to that 5960 ledge we've created over the last couple of days. Now, if you're looking for more analysis on a day-to-day basis like this is the exact type of conversation that we're having in the Trader Talk in today's market segment that I host Monday through Wednesday and Friday mornings. In fact, today's session is already archived for you, and I'm going to put that into the chat for you right now. So if you're looking for a more detailed conversation around the broad market and sectors and stocks in the news today, this would be an excellent class to check out. It is archived Monday through Wednesday. The Friday session is not archived. We discuss exchange-traded funds exclusively in that segment. So check that out if you'd like a deeper dive into what's happening in the market. Okay, from a standpoint of trading breakouts, I've got a few examples that I wanted to start us off with today. Financial space has been doing pretty well, and I thought let's take a quick look at, let's see, one of these here is my financials. Nope, a little higher, or is it this one? There it is. So you've seen the financials moving to new highs. Here's the gap up move we made on the 6th, the day following the election. Actually, the relief factor perhaps playing in here. We've seen financials moving to new highs. You had a little bull flag here, and now you've got another little bull flag, a consolidation or time consolidation more than a price consolidation, as we've just gone sideways for 3 days here in financials. But I'm only bringing that up to highlight JP Morgan today, because we are potentially in the midst of a breakout here today. So as you'll see on my chart, I'm going to drill in a little for you here, everybody. What we see are the previous trades we've made. We attempted to get into and hold the JP Morgan position, long shares. We bought 100 shares here at 226.65, but we placed a tight stop order beneath it because we didn't want to be put at risk of this collapsing against us. We built this trade with proper risk versus reward, and it meant a tight stop order beneath the 20-day. And that's exactly what happened. We got stopped out at 220.93, so we took nearly a $6 loss on the trade. Very unfortunate, especially given the way the JP Morgan has moved since the 6th, right? This incredible gap up created a fantastic flagpole. And then over the last 4 sessions, what we've seen is a cloth portion of that flag being built. And some would say that today's action is breaking it. Okay. So do we have a potential entry for new bullish traders looking at JP Morgan? Yes, we may very well have that. But let's talk about the process of reasoning why a trader might look at it like this today. It could be considered a little bit early still, right? And why would it be early? Well, of course, we're intraday. We have not closed the regular session, and a lot of traders put a little bit more validity to closing price action more so than intraday price action, right? So here we have a potential move that could be validating the opportunity for a continuation of the move upward. And many traders would say that as long as we don't give back on a gap move like this, we don't want to give back more than half of it, or many would say you don't want to give back any of the gap zone. So you would like to just hold on to the gap ledge right around here, which comes in around 234. And so these traders could be looking today to add a position to start trading JPM, believing that this is a continuation breakout, which in theory, from the standpoint of a bull flag, could give them the opportunity that's equal to the height of the flagpole we just created. Now, one of my cheats, because I'm kind of averse to doing math in the moment, I'm just going to take my cursor and hover over it. I can see it went 12.5% from the low to the high, and that was an equivalent of $27.80. Wonderful move, right? So now the height of that flagpole can be incorporated on a potential breakout as an opportunistic target to the upside. So some traders might just take that line And one of the ways I'll do this is I'll just shrink down my price scale over on the right, and then I'll just activate that line and add it to the low right here, the low from yesterday, essentially, because what I'm trying to do is give myself a potential opportunity for profit taking without going too far, right? Measured moves, we know, are never guaranteed to be achieved, but what we want to do is try and mitigate the opportunity of missing out on selling into strength. If we want to be a seller when we reach heights not previously witnessed, well, then we have to have those limit orders out there. And for some traders, it's a little easier to cut those profits a little bit short and make sure that you're exiting some of the time for portions of your strategy. And I'm going to talk about that quite a bit, because by no means does a breakout today even mean the most aggressive trader is going to take a full position on a breakout like this. They may simply decide to take only 25% today. And then maybe, as an example, they wait for a move through the high of the flagpole, and then they would subsequently add another chunk of their overall goal for the position. So, quick example, maybe they want 100 shares. Trader might buy 50 shares today, add another 25 on a breakthrough 248, and then add another 25 at a level above. Maybe they piece in twice, buy 50 today, buy 50 more on a breakthrough 248. That's also a possibility. But I realize many of you out there are just all in and all out traders. And if you have comfort with that, that's perfectly fine as well. Okay, so here's what we're going to do on the JP Morgan trade. We are going to go ahead and put ourselves in a small position of 25 shares. We'll go ahead and buy at market, and we're going to subsequently set an exit strategy beneath us at around 234. Okay, we're just going to try and limit our downside risk because we can't guarantee it without having the use of options. So we want to utilize a stop order, which if taken out, we just can't guarantee price, because a stop order, once it triggers, it becomes a market order. So what I'm looking at is likely a stop at 234. We'll do entrance at market here, about 242 almost. So that means we got about 8 points of downside on these 25 shares. So only $200 of real risk, right? Approximately. And then if we get through 248, well, let's set up another buy order, but we're going to do it as a buy stop order to buy more shares if we take out 248 to the upside. And we might do it a little higher because we want a conviction-based move, meaning if we're going to buy on an intraday move through 248, we might want to see it at 250 already before we do that, because our goal then is to capture momentum, not to be concerned as much about price. So let's try that. I'm going to do, first of all, I'm going to right click in the chart, and I'm going to do a buy custom for these 25 shares, but I'm incorporating my exit strategy along the way. So here we go. I'm going to do 25. Make sure I line those up. 25 shares that we will buy at market. And then subsequently with our stop, good till canceled, we will put that at 234. Okay. Now, I'm going to read that, just buying 25 right away at market price, selling only if we trade down to 234 or lower, remembering that we have gap risk. And so if we traded at 235 today, for example, but not down to 234, but then open tomorrow at 225, well, we're going to execute pretty close to 225. We're not likely to execute at 234 because of the market order to trade after trigger, okay? So there we go. Send that one off. We are now long our 25 shares. Notice that my adjustment here tells us we just bought in at 241.85, and you can see my stop also there at 234. Now, I'm going to add one more trade above 248 in the hopes of us taking out 248 with conviction. Let's place a buy stop at 250, all right? And we're not going to customize that one. We're just going to let that one go and see how it goes. So here it's buy 25 with a stop, good till canceled, and 250. And just like we can't guarantee price on our sell stops, everybody, we can't guarantee price on our buy stops either. So the risk here is that we close below 250 any given day and then open well above it. Now, so if we opened tomorrow today we close at 240 or so, but tomorrow we opened at 260. We're going to be buying close to 260, not close to our 250 stop. Now, we could theoretically consider a buy stop with a limit order. Okay, that's a possibility as well. But for our purposes, I wanted to go with it as a buy stop market. So we're just going to put ourselves into the position if we see this trading through 250 anytime in the next 6 months. Okay. All right. So there, I'm going to send that one off. All right. So you can see how we've got that set. So just a quick example on a potential look at a breakout that could be in the midst of going further, continuing higher. We do like, bull flags. Bullish traders like bull flags because they're continuations of the existing trend. All right. I have another one that I talked about just yesterday on the Schwab network. It's HIMS, everybody. Him and Hers has exploded to the upside following their earnings. Here's the earnings notation back on the 4th, so the day ahead of the election. And then the stock just really took off on Monday of this week. Excellent candle. Now, some of you, if I draw in some lines here, tell me what you think about this chart. What do you think this resembles? I mean, we've got a breakout. Many would say cleanly, right? But we've also got a bit of it kind of resembles a little bit of a cup here, doesn't it? And if this is the cup, well, then this portion kind of looks like the handle of the cup, which makes this line, the line we just broke through at around 24.5, that makes that the top of the cup. And when we're looking at cup and handle moves, potential cup and handle measured move calculation is from the top of the cup to the basin, right all the way down to the bottom. And in this case, that's about 10 points or so. In fact, I should have do that with a different, we'll do that with the standard line so I don't have to do my math. Just draw it down to there. All right, where are we? We are about 10, 11 points. Take that line, activate it, and add it to here. Well, now we've got our approximate target from a measured move standpoint. Now, we have broken out. We've got some tails in the midst of it right now. So there's a couple of things that traders need to be cognizant of. Breakouts from patterns where we take out levels of resistance and it seems to be blue sky above us. Breakouts can commonly start to trend, but they can just as commonly get thrown back to confirm support at the breakout spot. In this case, that would be this breakout level in green, okay? So if we got thrown back to 24.5, well, that would be okay, but it wouldn't be okay for all traders if you were a buyer today necessarily, right? You might be looking at about $4 of downside risk. So the question becomes, does the trader have total comfort and confidence to take a full position size? Or once more, is this one of those, hey, let's step in for a piece, make sure we're participating, and if we get thrown back to the 24.50 zone, are we then looking to add more shares at that spot, assuming that it is confirmed as support? So we come down and touch it, we trade down to it, we move off of it, then start moving higher again. Is that the type of action that a trader is more comfortable with? These are all the questions that a breakout trader needs to consider. Because again, we as traders, we're all very, very different individually, right? Some of us are comfortable buying breakout immediately as it occurs. Others want to see some confirmation. Some other traders want to not just see confirmation, they want to see the throwback to the breakout, test that, and that gives them the comfort. But again, all of these can work. It's all a discussion around probabilities, but also how do you like to approach your own trading and what gives you the comfort to place those trades and stick with them as long as you can. And that's why the development of your plan is so paramount to your own success. Part of that needs to be, if I'm buying into a breakout, this is what I believe is going to happen. Therefore, I'm going to place my exit strategy really tight below the breakout spot, right? Some traders will do that. Others would say, I'd be more comfortable taking it all the way to the 20-day because I'd like to believe that the 20-day is now going to provide support. And as we start trending out of this shorter term cup and handle. Okay. Now, there are just as many of you out there who are saying, Kevin, that's all well and good, but this is a very quick or short-term daily chart pattern. I need something more long run. Well, get a load of what you're seeing out of HIMS on a longer term chart. This is crazy to me because we are talking about a cup and handle in the short run. But if you were to look at this as a potential cup as well, we certainly could, right? If I extended the line here, like so, let me eliminate that extension here. Cancel left. Let's just activate. All right, so it's at least flat. So look at that. I mean, basically, this portion, the entirety of all of this action could be considered the handle of a massive cup and handle, a monthly, essentially a cup and handle. This is a weekly chart, but my point remains. This could be a cup and handle potential breakout on a daily chart. It could also be a cup and handle potential breakout on a weekly chart, implying an even larger, long-term move potentially. Okay, so know your time frame, know your preferences, and then adhere to those as best you can. Now, for our purposes today, let's put ourselves in a position here on HIMS. Let's get ourselves long a portion, not to exceed our comfort zone, and we'll stick with it as long as we hold on to the breakout. Let's consider 24. Well, you know what? On second thought, let's go down to that 2250 area, because 2250 would take us below the 20-day moving average in orange. And look at how quickly the recent price action, the explosion to the upside, has allowed that very speedy 20-day moving average to get caught up. So we could very near term here, the next week, see that 20-day equal to the breakout level. That'll give traders confluence of data and information at that same level, 24.5. So let's go to 22.5. That gives us more risk, $6 a share. But if we own 50 shares, no problem. Our risk is about $300 on 50 shares, $6 a share downside. We could probably stomach that. Guarantee? No, we can't guarantee that we'll stick to only $300 in loss, but that's what we're going to strive for. This one we will not do with an addition just yet. We'll look at this. Maybe this is a trade that works down the road for adding, but instead of positioning to add just yet, let's just get ourselves long 50 shares. So we're going to do just that. Update the share total to 50. All right, which we are then going to do again as a market order, but we need to change our exit strategy to good till canceled stop. And we want to come below that 20-day at 2267. So we're just going to go to 2250. Confirm, we make sure we read that out. So buying 50 at market, selling 50 at a stop of 2250, recognizing we can't guarantee that price in any way. All right, so there we go. Now we are long there, and you can see we are just below the 20-day there. And then again, next week, we might have an opportunity for a revisit on that one. But a really intriguing chart given the nature of the daily look with a cup and handle and the weekly with a cup and handle. I found that to be super intriguing when looking at it today. All right, how about another one in the midst of a breakout, everybody? I have Flutter Entertainment. Now, Flutter had been in a bit of a consolidation mode here of late, right? Look at what we've done. We've just taken out a major resistance spot on the daily chart. We could say that the range here, that's 250. So let's just duplicate that line and take it down to the approximation of support. Call it 220. All right. So let me just document that for us here. 220 here. Duplicate that and push it to here. Call that 250. All right. So we have a potential 30-point range. So here, our opportunity could be to take the trade today with an upside opportunity of maybe 15 points if we were to make the measured move target. Again, no measured move is a foregone conclusion. No measured move is guaranteed to happen. But we as traders, we need to start calculating these estimations so that we can put ourselves in good exit strategies. And I've got some great examples of our example portfolio that I can highlight for you here momentarily. So let's get the Flutter trade entered, and then we're going to look at those examples that where things have worked for us, and then there's a couple where they haven't quite panned out. That's going to happen. That's the nature of trading. So here we have that $30 potential from 250 to 280. Why don't we try working from an option position, a long call with a short call above it. We call that a long call vertical. We buy the near price and then sell a longer price out the money in the hopes of it running through the short side of that call contract, which would then allow us our maximum gain if it played out that way. So obviously that's not a guarantee, but that's what we might strive to do. So let's go to our trade tab, and we're going to look at Flutter, but we're going to give this a little more time. So these offer us monthly contracts only. I know that because I don't see anything in here that says weekly, and I'm not filtering to kick out the weeklies. So let's go. We could look at December, but what I want to think about here is the time it took to set this up. It was September 12 or so that we got into this range, and then we didn't bust it until this week. So let's give this at least that 30-day window to accomplish it. And if you want to give it a little longer, we could sure go out to March. But right now, I think that the 37 days to expiration of December 20 is probably the one that makes the most sense if we're trading for the potential of achieving the height of the range from which we have broken. So we are trading at 265. The next question becomes, what do I want from my long option position? Generally speaking, many traders are trying to accomplish a long call position with a high delta because it means that they're going to receive a larger percentage move for their contract relative to a $1 move in the underlying stock. Let me say that again for some of you who are unfamiliar. So I'm looking at this column here, delta. Delta can be considered the rate of change on the option price if the stock itself makes a move of $1. Okay, so if Flutter were to go up from 264.13 to 265.13, this contract we would expect to see the 53.30 by 56.90 change to 54.30 by 57.90. That's dollar for dollar with a $1 delta, but that's obviously costly. Not costly relative to the price of the stock, of course, because you could take one contract here for $4,650, and that represents 100 shares of the underlying stock, versus owning 100 shares today of Flutter at 264. That's a $26,400 position. So you're able to put yourself in a trade equally, that's going to get equal movement, if you will, on the contract for what amounts to $4,600 relative to $26,000. That's a pretty big discrepancy, right? So only 20% of the total cost you would have to own the 100 shares. So a lot of traders consider it that way. Now, as we move on down the line here, everybody, the question is, would you prefer to spend a little bit less and get potentially a little bit less? Maybe. So some traders might look at the 240 strike, which is still 24 points in the money. But one of the main reasons that they're going to consider in the money contracts like this, everybody, is that the in the money contract can also be looked at when you consider delta. The delta can also be considered the percentage of likelihood that that contract specifically is in the money at expiration. Okay? So it is equal to the rate of change in a $1 move in the underlying stock, but also could be considered the percentage likelihood that that contract is in the money at expiration. And that's one of the reasons that a trader would adhere to that, because if you stick with the 240s here, even though you might have to pay $2,800 today, there's likely, not a guarantee, but likely to be value remaining at expiration. Okay? That's why you're considering that. Now, if we want to add the short call to this, the easiest thing to do, I hope you saw, I just clicked on the 2870. That's what populated this down below. Well, if I'm wanting to get out at a price, obviously believing that Flutter has more upside here, I suggested 280 might be an opportunity, right? Let's go a little below that. Instead of 280, let's go to 270. Well, the 270 here is bid at $7.70. So my current cost is $2,870. But if I hold down the control button and click the bid price, now you can see it's -1 here. And now I can put myself in this position. A 30-point spread would cost me $1,945 for that trade. Okay, that's the current limit. Now, of course, what would we get it from this? Well, let's hit the confirm and send and we can read it. So if we were to buy one contract that buy the vertical spread of Flutter, buy the 240, sell the 270, this is for December 20th expiration, our maximum loss would be our outlay, the amount of money we put on the trade. Our max profit would be the difference between our strikes, 30 points, less the cost to put on the trade, $1,945. So $3,000, 30 points times 100 shares. That's 3,000 less our cost of 1945 gives us our max of 1,055. And that is assuming that Flutter is above 270 on expiration Friday in December on the 20th. Okay. So that would give us an opportunity to play for more upside, but it would greatly reduce our overall risk, but it also greatly reduces our investment time because we can only hold this trade for a maximum of 37 total calendar days. Okay, so let's put that one on and then a quick peek back at the chart. And I might put, if you wanted to see orders, don't forget you can place the short orders button on there. And it should apply. Mine is not applying here at the moment, but it absolutely should. So we'll keep an eye on the Flutter for us going forward, everybody. So those are my 3 brand new trades for consideration. Really excited about all 3 simply because they offered us opportunities for actual breakouts to be traded. A couple of them on the long side with just shares, and any of them also on the downside. From the option standpoint, we've limited our risk simply because we didn't invest nearly as much. Okay, let's take a look at what else we have to work with. So we're going to take a revisit through in our final 10 minutes, my example portfolio. So I'm going to go up to the monitor tab here. What I need to start with, so you can see I've got Flutter in there, but I've got a couple of positions that we tried, that we've traded previously, one of which was Palantir. So we had been in Palantir and we just got taken out of it last week. And this is an example, a wonderful example of a trader who decided to go all in and all out. They bought 100 shares back here on this candle breakout. We did not set an initial stop order, but we did set a limit sale at 55. So we bought in at 44.70 and had a limit out there at 55, and we sold everything at 55 when it got there. What is one of the things we could have done differently here? Well, clearly we could have absolutely sold less. We could have sold maybe 25 and let the remainder run. We could have sold half and let the remainder run. One of the key components, if you are a seller of only a portion of the trade, had I done this for 50 shares instead of 100, the most important factor after the fact would have been to ensure that I have a subsequent stop order to move on from my remaining 50 shares if I held them, right? I want to continue to raise my stops along the way. Unfortunately, we didn't get into that example here. Not a bad trade. The position made 20+%. Very pleased with how this worked out for us. But I wanted to talk about it because it was very simple, black and white, all in, all out. We could have done better. It's a great example of having been able to do better if we just limited our sales and let this continue to run a little bit. We could have done a lot better, perhaps. But we're not going to kick ourselves or anything like that because we did a great trade. We made 20%. That was a wonderful example of incorporating a sell strategy that some traders like, selling into strength. As a trader, I'm a preferred fan of selling into strength more so than getting stopped out on weakness. but as a trader, you got to bring them all to the table at some point, right? And my encouragement to you is to try this a number of times with your individual positions to find the method that is most comfortable for you as a trader. Again, we are all very, very different. Okay, so there's a Palantir review. And then the other one I wanted to hit on real quick was Charter, because we had, I'll tell you what, I pulled this up today thinking, oh, can't wait to talk Charter. But we didn't get put in our trade, everybody. I made this trade last week with you all. We placed it as a vertical, buying the 370s and selling the 430s. It was going to cost us a pretty chunk, 3,370. We didn't get hit, everybody. We did not make it to our limit. So unfortunately, we didn't get in the position. However, look at what's gone on since then. So now you've got Charter holding the flag. We talked about the flags earlier today. So this is a setup that some traders really enjoy, right? Big, beautiful flagpole. Flag developed here over about 4 days, held this gap. Look at how it held that gap, everybody. Did it hold it intraday? No, but it held it on a close. And that's why we talk about closes more so than intraday examples, right? So we held the gap. Today, a fantastic explosive move, right? Great move right through the downtrend line with a wonderful tail, indicative of bulls stepping in right at the downtrend line. That can be kind of a slingshot move. And then additionally, let's make note of the fact that the volume today is already equal to yesterday's volume. And we still have 2.5 hours to go. Okay. So you're getting a bit of that rocket fuel behind this potential move. Now, as such, I feel like I'm compelled. I just feel like I missed the opportunity last week. We got to place a little order here. So I'm just going to put one in to buy. And then the last thing I'm going to highlight is the fact that this change has been dramatic, fixing the long run downtrend. This is a weekly chart now, everybody. So even though we might be buying at highs today, the next ledge of resistance is up there around 450. So is there a trade that could be made here? Sure, it's possibly another 10% even still. So not to say that's a guarantee. You all know how this works. We're talking probabilities, never certainties. So let's put ourselves in some shares. Let's use a tight stop with today's lows. And let's just make sure, or better yet, not today's lows. Let's go to these lows in the gap zone. 388.90. Let's make it 388 on our downside exit. And then we'll just target the resistance up there at about 450. And we'll do a bracket order for those. Just because I feel like I'm just bummed we missed on it. So let's just do a buy custom. We'll do the OCO bracket. Again, OCO, one cancels other. Simply put, it means you can only execute the sell limit or the sell stop, not both. Okay. So $390, or now $413, of course. So we do a market buy. And if we are risking down to, what do we say, about 388, put that in there. 388. So we're risking 25 points to make potentially 40. Maybe a little bit wonky in terms of risk versus reward. Okay. But the breakout might give the bulls a little bit more confidence here. So we'll do a market buy. We're going to do a target at 450. You know what? Let's make it 455. Let's see if we can get just a bigger chunk out of that. All right. 25 shares, 25 shares. All right. What's our total cost on that? Only about 10,000. So if we 25 shares and we're down $25, that's a little bit more. All right, let's make that an edit. Let's make that 20 shares. Just want to keep our risk tolerance to an appropriate amount, everybody. So this way on 20 shares, we would lose about $500 if we got stopped out for our approximation of $25 in loss. So obviously can't guarantee it, but that's what we're going to strive to maintain. So just making sure that my market is good, and then my sell stop and sell limit good. Oh, nope, they're not. I need to edit those to good till canceled. My apologies. All right. So there we go, everybody. So there's one on Charter, and now you can see that those orders are on the screen here, and they are evidenced by that little chain link to let you know that they are linked together for you there. All right. Yes, I've seen a lot of questions about this, everybody. This will be archived for you. Not certain about a time frame, but I'm going to get the notes updated right away. I should also mention last week in this class, we did a scan on what is called the uptrend breakout with increasing volume, looking for securities that were already in an uptrend that had been showing an increase to volume over the last 5 trading sessions that were today moving to 1-month highs. That is in the notes of this show right beneath you here. If you'd like to take the script from that, know that our scripts are not guaranteed for timing or accuracy, and they are not a recommendation for you to use them. But if you'd like to attempt to utilize that scan and play with some of the variables in it, you might find that helpful. So check that out in the show notes, everybody. Okay, I got a couple other positions we got to look at real briefly, and then we're going to let you go for the day. So we are going to go back to my activity and positions, and we have to look at Reddit. Last week, we looked at Reddit. We have a trade that has already taken us through the limitations, meaning we are above the short call. What we tried to do last week was stick with it to give it a little bit more time in the for the opportunity for some of that decay to come into play on the short 120s. We didn't necessarily need the stock to drop. We don't want that. But we would like to see some of the decay to come out of those 120 calls. Well, we've been at max gain here on the position for a while. We're going to go ahead and close this one out today. And the easy way to do that, by the way, let's just show you the chart on that. Here we go. So we bought back here 100 shares, got out 100 shares, and then this option trade is not going to highlight the entrance. But you can see this has been in a wonderful move to the upside. Not to suggest we shouldn't consider, another option opportunity here potentially, because you've seen one bull flag right here, a very quick one right here, another quick one right here. This is trying to continue the process it's been going for. This could certainly keep rolling. You just don't know how long these trends can run. But we're going to close out the trade here. Easiest way to do it is to come to the positions right here, right click, create closing order. Now, I don't want the single contract. No, I want the full deal. So I need to come to the name here where it shows zero quantity so that I want to create closing order so that I sell the vertical call. I want to sell them together. It's the current limit at $30.10. So it's basically just unwinding my long side trade here, everybody. So there we go, 30.10, because we're 14 points above it. But really, nonetheless, did a great job on this trade. It worked out fantastically for us to walk away with about $1,100 in profit. Not much to be upset about there, other than, of course, hey, we could have picked a different strike. We could have gone with a longer strike or a higher strike, certainly, but it happens. So go ahead and confirm and send. And we are out of the Reddit trade, or will be out of the Reddit trade when we hit $30.10 on that. Okay. In fact, yeah, that's where we should be. We're right. We're only a tick away from it, so we should get that any minute. Okay, everybody, we are pretty much at time. Man, this has been quite the active session. Got to a number of new positions. We also reviewed some that had worked in our favor, reviewed some that didn't work in our favor. I hope that's the takeaway. As traders, we are going to make some trades that don't work. That's okay. Our goal is to keep those small. And then the big ones, we got to work to raise our stops, manage our trades along the way, and work to continue to improve. That's really the key takeaway that I'd like to leave you all with today. So with that, let me remind you of some things here. Please follow Barb and me on X. I am at Kevin Horner CS. Barb is at Barb Armstrong CS. Each of us coaches are on X for you all. We post there some charts throughout the week, some inspirational ideas throughout the week. I posted on Monday my favorite taco recipe that I made on Sunday during football. It was a fantastic day for me, and I'm pleased to share that recipe with you all who really do enjoy tacos as much as I do. But take a moment to complete a survey as well, if you don't mind. We do have the survey opportunity. That only takes about 60 seconds, everybody. So if you don't mind taking that time to complete the survey, you can click the link from the chat function right there, and it'll open in a browser window for you. And you can share with me your thoughts and your insights. I'd love to hear from you. Listen, we get those directly. They come to us as coaches. We can read all of your comments and notes, and we take those with us forward so that we can bring your concepts, your ideas to the table where pertinent and available. That's a big part of what we want to do. Don't forget to check out, maybe even bookmark schwab.com/coaching, schwab.com/live events. Lots on the table here for you from the Schwab coaching team. We really appreciate you not just joining and participating in the show, but being here as consistently as many of you are. You all make the show, and you certainly make it an enjoyable process for us as coaches. We love it. So thanks for being here, everybody. Big thanks to my friend Barb in chat here, and thanks to all of you. I hope you all have a fantastic rest of your Wednesday. I look forward to seeing you all again real soon.